Hello, welcome George Rodrigues, Senior Business Manager in Latin America. It is an immense privilege to be with you today to continue our executive journey focused on the structural transformation and growth of your organization. Throughout my career acting as a director and international business manager in renowned multinational companies, I realized that the true difference between lasting success and premature failure is rarely just the product the company sells or the market in which it operates. The fundamental and undeniable difference always lies in the financial intelligence applied to the daily management of the business. When I decided to found my own consulting firm with a total focus on small and medium enterprises, my central goal was to bring this same world-class corporate intelligence to solve the real and urgent pains of business owners who struggle to expand safely. The theme of our first lecture today is financial intelligence for CEOs, and we will focus intensely on how you can know your real margins and anticipate cash crises with great precision and advance notice. To understand the depth and weight of this subject in your operation, we must look at the roots of global accounting and financial management. The method we use to measure business success was born in the city of Venice at the height of the commercial renaissance around the year 1494, when a monk and mathematician named Luca Pacioli systematized the ingenious double-entry bookkeeping method. Before this invention, merchants simply did not have a clear and integrated view of whether they were making or losing money in their vast maritime and land operations. Pacioli established the fundamental principle that every transaction affects two accounts simultaneously, dictating the golden rule that a company's assets always exactly equal its liabilities plus its equity. This seemingly simple principle revolutionized commerce at the time and incredibly continues to govern the balance sheets of the largest corporations on the planet today, from traditional heavy industry giants to the most valuable technology companies in the world like Apple and Amazon. Over time, accounting evolved from a mere record of past events and auditing to a true navigation compass for the future of the business. In the 20th century, corporate visionaries like Alfred Sloan, at the helm of General Motors, introduced management based purely on numbers, allowing huge divisions to be controlled with surgical precision. And the great Peter Drucker taught us the undeniable premise that whatever cannot be measured simply cannot be managed. More recently, in the competitive Silicon Valley, executives like Jeff Bezos at Amazon changed the rules of the game by proving and documenting to shareholders that free cash flow was immensely more important for long-term success and dominance than traditional accounting profit, thus managing to finance unprecedented global expansion using the business's own financial cycle. Similarly, when Steve Jobs returned to Apple in 1997, he found a company with totally strangled margins, trapped in an excessive portfolio and on the verge of imminent bankruptcy. But he used a relentless financial reading to cut unviable products and focus only on what generated real pocket profitability, creating the unshakable foundation for the empire we know today. Bringing all this time-validated wisdom to our present scenario, the greatest and most silent pain I find daily in small and medium enterprises today is the terrible paradox of cash flow and growth. The harsh reality of market data and research from the world's largest consulting firms shows us that over 82% of corporate bankruptcies occur due to poor liquidity and cash flow management, and absolutely not due to a lack of accounting profit. It is perfectly possible and very common for a company to be growing steadily, billing more each month, breaking sales records and recording beautiful profits on its income statement, but still go bankrupt suddenly because the money simply did not enter the bank account in time to pay payroll, essential suppliers, and tax burdens. Accounting profit has a serious flaw in daily management, as it recognizes the sale and success at the exact moment it is made, even if your customer will only pay the first installment 60 or 90 days from now, while cash flow reflects the hard cash that guarantees your survival and your power of action. Today I see entire organizations full of potential being eroded and destroyed by 7 silent killers of cash. The first and most lethal is the timing mismatch, where the company structures a model in which it pays its entire supply chain and its production team long before receiving the final value from its customer. Another great villain is unfunded growth, the phenomenon of overtrading, where the company gets carried away with sales and exhausts all its working capital buying inputs and funding operations without having the necessary cash reserve to sustain the expansion. There is also the serious problem of excessive inventory, which you should see as bundles of money tied up and paralyzed at the back of a warehouse. We have the dangerous mix between the owner's money and the company's money, unmonitored bad debt that aggressively erodes margins, investments made without adequate calculation of financial return, and market seasonality completely ignored during the cash planning phase. Furthermore, current leaders suffer from the dangerous illusion of margins. When we use advanced analytical methodologies like the price waterfall, we quickly realize that the list price of your product undergoes countless invisible deductions, such as aggressive commercial discounts, hidden bonuses, heavy freight costs absorbed by the company, and specific technical service expenses until it reaches the true pocket price and ultimately the real pocket margin. Often, when doing this detailed analysis in our consulting, the main executive discovers with great shock that their biggest customer, the one who demands the most time and attention from the team, is exactly the customer that consumes and destroys the entire profit margin of the operation. But we have an extremely promising and transformative future vision for financial intelligence applied in small and medium enterprises. In the very near future, total clarity in management based on real data updated to the second will not be a luxury of multinational corporations, but the minimum survival standard of any business that wishes to continue competing. Artificial intelligence and predictive analysis tools will entirely democratize cash management, automating the old and exhausting manual spreadsheets and integrating all billing systems directly with bank accounts into intuitive and instant visual dashboards. Continuous machine learning-based models will analyze the complex historical payment behavior of every customer in your base to accurately predict with mathematical precision which invoices will be late, issuing immediate liquidity risk alerts weeks before the financial hole happens in practice. The evolution of technology will completely level the corporate playing field, allowing your company, regardless of the number of employees, to have access to the same analytical sophistication and scenario control that top global financial directors have, transforming the treasury, which was historically seen as a purely reactive payments and collections area, into the true strategic command center of your company. The future will require absolute predictability, and financial management will become the main mechanism to ensure the sustainability and growth of equity value. For this vision of full success to become a tangible reality in your company, a profound and definitive change must occur in your life as a manager and in your routine as an executive leader. You must abandon once and for all management based on intuition and hope and adopt strict and technical control over the numbers that truly drive the company. The first and most urgent change is the implementation of a 13-week projected cash flow. This dynamic model will provide you with crystal clear visibility of the next 90 days of the company's life, detailing week by week all real inflows and committed outflows of resources, which will allow you to take bold preventive measures such as the strategic anticipation of receivables or the friendly renegotiation of terms long before your bank balance crosses the dangerous negative line. The second major change is absolute mastery over the most ignored metric by business owners, your cash conversion cycle. You need to strictly balance the average product storage terms, the days it takes to pay suppliers, and the customer receipt term to ensure that the very machinery of the operation finances your growth organically and healthily, reducing the expensive need for third-party capital. In addition to all this, your behavioral incentive system must change to reflect the new reality. Stop commissioning and evaluating your commercial team solely based on gross volume billed, as this encourages unsustainable discounts, and start rewarding them based strictly on the real and highly profitable pocket margin that each new contract actually brings to the company's financial oxygen. Your role as an owner and strategist is not just to sell more products, it is to ensure that every sale your team closes preserves and multiplies your wealth. Institute the unbreakable habit of gathering your key team every Monday morning to review your managerial financial dashboard, observing and dissecting critical indicators such as contribution margin, liquidity index, and the adherence of essential expenses to the budget with the same obsessive attention that a pilot observes the vital instruments of his airplane during a flight through an intense storm. The executive who masters this routine stops putting out fires and begins to deliberately build the future of the business. Do not under any circumstances allow the blind pursuit of rapid revenue growth to become the exact reason for the bankruptcy and exhaustion of your cash. Your current organization has full internal and operational conditions to grow and scale highly profitably and armored against unforeseen financial crises, provided that the correct financial intelligence becomes the sole foundation of your major business decisions. The first practical and immediate step to turn this rich management theory into more money available in your cash tomorrow invariably begins with an unbiased and professional diagnosis. Therefore, I personally invite you to take this strategic step today. Schedule an initial diagnostic session of 2 hours completely free and without any financial commitment whatsoever with the senior specialized team at KPA Gold Consultoria. In this strategic high-level meeting, we will dive deep and honestly into the real numbers of your company, pinpoint the invisible bottlenecks where your cash flow and your effort are leaking, and side by side design the foundation of a totally practical roadmap to protect your resources and expand your profit margins over the next 90 days of total focus. Do not wait for the end of the month crisis to arrive and the bank limit to run out before starting to act. Talk to our team today, book your detailed diagnostic, and let us together build the stability, profitability, and growth that your business and your family deserve. Thank you very much for dedicating your valuable time for your undivided attention during this content, and we will see you shortly in our next executive management lecture.